steps to take to buy a house in 2021-2022. First off, you have to ask yourself, is the time right? Is the time right for you? Hi, I'm Genevieve Partsch with Hearthstone Real Estate. If you enjoy my videos, be sure to like and subscribe to my channel to keep up with tips, tricks, market trends, and fun things to do in the Lane County area. We're going to start this off by talking about income. Do you have consistent income? Lenders are going to want to see recent pay stubs, your W-2s. This lets the lender know how you are being paid. Are you being paid on salary or hourly basis? Then the lender will know how much you're making along with your work history. All right, let's talk about work history because there is some myths out there. I'm sure you're going to hear people talk about a 2-year work history. Let me dive into this. You do not need to be at your current job for 2 years in order to qualify for a loan. A lender will look through your work history and make sure you have been regularly employed throughout the 2 years without any big gaps in your employment. This gives a lender a better feeling to loan a person that has been working consistently. It also shows them that you will most likely stay employed for the years to come. There are exceptions here. Maybe you took off work to have a baby, or you're just graduating from school. Sometimes, but not always, they can take schooling as employment history. So check. You do have income coming in, you are a strong employment history. Lenders will also be looking at your credit score right now. In 2021, you need at least a 620 to a 640 credit score for most home loan programs. Don't let this scare you from talking to one of my preferred lenders. Lenders can be a helping hand to help you boost your credit score quickly, give you options, resources, strategies, and a goal timeline. A lender is going to pull from all 3 credit bureaus and then they'll line the credit scores up from lowest to highest. Whatever that middle score is, the lender will use it for the means and purposes of your home loan. Another thing you may be hearing from other people is them encouraging you to shop around for different loan interest rates, maybe different lender additional fees. You will want to look at all that. Then you have to ask, do you want to live in this area for an extended amount of time? Of course, when you take out a 15-year or 30-year mortgage, you don't need to stay in that house that long. You can really sell your house anytime. But to make the most financial sense, you probably want to be in that house for at least 3 years. The longer you live in the home, you will be building equity and money in the home. The more money you can get out of the home when it comes time to sell. If you only see yourself in the area for a year, it's probably not a great time to purchase a home. All right, let's recap on this. Is this a good time for you to purchase a home? Think about, do I have consistent income? How is my work history? Is it pretty consistent with the 2 years? Is my credit score around a 620 or higher? Am I willing to settle down here for a few years? Let's take it to the next step of buying a home. You will need to calculate how much you can actually afford or are willing to pay for a home. When you sit down with a lender, they will go over your DTI, debt to income ratio. This will show you how much income you have coming in and how much debt you have and expenses you have going out each and every month. This will help you see what monthly payment you can afford and feel comfortable with going towards a home. Most lenders are going to look for your debt to income ratio of about 50% or less. The lender will want your debts, your student loans, your car payments, your house payment, your minimum credit card payments. They need all this to be 50% or less than the money you bring in each month. Do you have money saved for a down payment and closing costs? The down payment is one large upfront sum that you put towards your house. This is often a percentage of the purchase price. You will need to save up money for this and also closing costs. Closing costs do differ because they are just fees. They are fees from your lender and fees for title work and miscellaneous fees. These do not get added to the purchase of the house. Depending on your loan type, the down payment could be as little as 0% if you are using a USDA or a VA loan. then it can range from 3.5% or higher, depending how much you want to put down. So you need to save up that money as well as the closing costs. If you are saving up for closing costs, they are typically about 3 to 4% of the purchase price. Depending on the market, and if you have a crafty real estate agent, you can negotiate the seller to pay for those closing costs in the offer. All right, so we've discussed, is it a good time for you? You have calculated your debt to income ratio, and you've saved up for that down payment and closing cost. Now let's chat about buying a house in 2021 and 2022. Let's get you pre-approved for a home loan. This is a very, very important step, especially in the market we are in Lane County, Oregon. So before you start your house hunting, because if you don't actually get pre-approved with a lender, you truly do not know how much you can afford. There is a lot a lender takes into consideration when creating a pre-approval letter. Your lender is going to check that you can qualify for this loan. They will also tell you about taxes, insurance, and your overall price point you should be looking at. This does vary depending on what lender you go through. One lender may have you approved for $300,000, another can have you approved for $350,000. Lenders will differ here as well. It's very important to get pre-approved prior to looking at homes. Because when you start looking at houses, you will need a pre-approval letter from your lender to accompany the offer that you submit on that house. Why do we do this? This is a great way to show the seller you are a serious buyer. They will know you have already talked to a lender, the lender has reviewed your financials, and that you are very serious about purchasing their property. It is great to do before you start looking at any homes. Different types of home loans you can be pre-approved for. Let's say you don't have a down payment. There is some down payment assistance programs you can use. I will be making a video with updated down payment programs here soon, so stay tuned. A VA loan is an excellent program if you're a veteran or an active military member. This lets you buy with zero down. There's also a USDA loan, which depends on your debt to income ratio, and it needs to be in a rural area. Make sure you talk to your lender or realtor about the areas that USDA works. This is also a zero down program. The other very popular loan types are FHA loan and the conventional loan. An FHA loan is going to require at least 3.5% down payment. A conventional loan could be 3 to 5% or however much you want to put down. All right, I'm sure we've all heard this myth that you need 20% down. As you can see, that is not the case. You don't need to save up thousands and thousands and thousands of dollars. And with interest rates at an all-time low, right now is the best time to finance. Let's say you can come up with more money. I would actually finance and keep that money in your pocket for an emergency fund. What's next? Find a real estate agent, someone like me. As a buyer, it's crucial to hire a professional buyer's agent. What do I mean by a buyer's agent? This is a realtor you work with specifically throughout the entire home buying process that represents your needs in the transaction. You'll see houses with for sale signs in the yard. That is the seller's real estate agent. They represent the seller. That agent is the person that is listed on the sign, and they work for the seller and don't always have your best interest if you call them. And I'm saying this one more time because people don't understand. They work for the seller. You as the buyer can have the same luxury. You can have an agent of your choice to represent you and your needs, to help guide you through the process and have your best interest when making difficult choices. So what do you look for when hiring a buyer's agent? First, make sure you are familiar with the loan type that you are using. If you are following my steps already, let's say you're just using a VA loan, ensure that agent you are working with is experienced with VA loans. Not all agents are familiar with the restrictions that come with certain loan types. As a first-time home buyer, you will want to find an agent that is really good at communicating and coaching you through the process. A great question to ask them is, How many first-time homebuyers do you work with on a daily basis? And you want to make sure they're familiar, and you want to make sure that they're familiar with the areas you are looking to purchase a home. When you find a buyer's agent you want to work with, there's usually no cost to you to work with that buyer's agent. In most situations, the buyer agent will be paid through the close of escrow from the selling side. This can differ in some situations, but most of the time, the seller pays the real estate agent fees, and the buyer agent is no cost to you. So you should always work with one if you have the opportunity. And don't feel like you have to buy a home completely on your own, because it's just not the case. Now let's get to the fun part, house hunting. All right, now that you've hired yourself a buyer's agent, you're going to work with your agent to prioritize your wants, your needs, make a list of the price amount of the bedrooms, bathrooms, an idea of square footage you would like, lot size, and what other factors you are into, your wants and your needs. Now that you have sat down with your agent, you will start to look through houses together. It is the agent's job to schedule showings for you, tour homes, go to open houses as well. And hopefully, with not too much time spent, you will find that home that feels right and suits all your needs and love. But keep in mind, there is no perfect home in the real world, but you will find the right house for you and your family. Sometimes a splash of paint, some tedious fixes can make your dream home. Just keep that in mind when you're house hunting. This seems like a lot, I know, but buying a home is much easier than going over all these steps in detail. You have found that dream home and it's time to make an offer. You're probably asking yourself, when will I know when to make an offer? Here's how I like to advise my clients. If you walk through a home and you tour it and you don't get this I love this feeling about the home, it's probably not the home for you. But then you gotta think about also, would you be bummed out if someone else got the home tomorrow? If this is the case and you would feel upset, you feel like you're going to miss out on an opportunity to be in that home, then it's time for you to make an offer. This has been very helpful when I advise my clients this in the past. Depending on where you live, each state, county offers can vary, and your agent can help you through that process. But typically, when your agent writes the offer, the seller usually has 24 hours to respond back to your offer. The seller can either respond that they're accepting the offer and your terms that you have written to them, or counter the offer, which means they agree to some of the terms, and the seller changes or rejects some of the terms you have written in the offer. Lastly, we don't love this, but they can plain and simply reject the offer. If your offer does get rejected, don't feel bad. This doesn't mean you can't just submit another offer if you want to, or you can find another home. I also advise my clients, don't get too excited about the home until you have an accepted offer and have completed your home inspection. Now you found the house and you made an offer. Let's say the seller has accepted your offer and you're now officially in contract on a home. One of the first steps here is to deposit the earnest money into a title company listed in the contract here in Oregon. The standard timeline is 3 business days after an acceptance of an offer. Also, you're going to want to schedule a home inspection because the clock is starting to tick. A home inspection is an out-of-pocket expense, and the price can vary on the age of the home, square footage, and if it's on a well, septic, and any add-ons you add. Watch my video on home inspections to learn more about the add-ons. You can choose an inspector of your choice. If you don't know who to use, your real estate agent will most likely have someone to recommend. This will be the best money you'll spend on a home when in contract. Once you find out the condition of the home, 2, this is a negotiation tool to have repairs completed prior to moving in or money back, which here we call it a credit to the buyer. Remember how we said earlier, no house is perfect, not even new construction. An inspector is going to find things on the home that may scare you, but they can be little fixes or large fixes. The inspector is going to tell you everything they find. They're going to tell you everything. That is their job. After you have negotiated repairs to become completed, you will have to have an appraisal done on the home. This is completely different than what we just talked about. The home inspection was an inspector you hired to look and protect your investment. A home appraisal is what a bank/lender orders. The appraiser will assess the value of the home. Now, the reason for this is lending will not allow you to overpay for the house. They are not going to give you more money to buy it than the appraiser's value of the home, which an appraiser considers alike homes sold pending and active listings when coming up with their value. This will be another fee you are responsible for paying for and vary as well. Sometimes a lender can roll the appraisal into the loan, but be prepared to pay for the appraisal out of pocket. An appraisal can go 3 different ways. The appraiser can go out to the property and they can appraise it at higher than your contracted price. And if they do this, woohoo! That is fantastic for you. Because for you, let's take this example. Let's say your purchase price on the contract was $300,000 and the appraiser valued the home at $310,000. Well, that means you instantly have instant equity. Your purchase price does not go up. The seller does not know the appraised value. You are buying a $310,000 home at $300,000. So when you close instantly, you have $10,000 of equity. These are my favorite situations. Another is an appraiser can go out in at sales price. This is very common. The appraiser does know what your sales price and the contract is. Sometimes the appraised value comes in right in at your contract price. Like I said, this is the most common situation and it is a good situation as well. The last situation I don't like to talk about, but it does happen. The appraiser can come out under value of the contracted price. This does not automatically mean that this is a deal killer, although we know the lender will not give you more than the appraised value. So in this case, the seller may want to or be willing to lower the sales price to accommodate the appraised value. And that way you can keep moving forward to that closing table. You need to make it through the home inspection, ensure that the home is satisfactory. But you have to please the bank and make sure the value is sufficient. All right, breathe. We're almost to the finish line of buying a house in 2021, 2022. While the lender is working on the final numbers for closing, you will want to have a final walkthrough prior to closing. This walkthrough is very important. First, because A, you must be going back to the house and make sure the seller has completed all the repairs you have requested and agreed upon after the inspection. If it's a repair you just can't see, I ask the seller or seller's agent to provide a receipt pictures of the completed work. That way, if you move in and you have any issues with a repair that was completed, you will have the company's information and a receipt to show them if a problem arises. B, you want to make sure the home is how you saw it when you put that offer in, that nothing is removed that shouldn't have been removed, and that home is still in good standings prior to signing those closing papers. The final step is here, closing on your home. Your lender will be providing you with a closing disclosure, and they are required to give you this 3 business days prior to closing. This closing disclosures will have all your numbers on it, your purchase price, your interest rate, and everything you will finalize at that point. It will also show your cash to close. This will be the amount you need to bring to the closing table to cover your down payment and closing costs. You most likely will go to a title company or a real estate attorney office on your actual closing date. Depends what state you live in. You will sign all your loan documents, title documents, and disclosures. This roughly takes about an hour. Be sure to bring a cashier's check with the amount the lender put on the closing disclosure and your driver's license. After you sign, do not go out and buy new furniture or any large ticket items. You have signed the loan. It will need to fund with the title company. Once the funding has taken place, the title company will release it to the county to record and finalize that sale. Wait for these words. Once you hear these words, we have recorded. It's time to celebrate because you are officially a homeowner. I knew that we can get through this and you can do it. Hopefully this was motivating for you. Maybe from renting to purchasing your first house, or you have been in a house for a while and want to purchase a new home. Let this be motivating to purchase a home in this new year. If you have any questions about the process or any real estate needs, Feel free to comment down below, and I'm always here to help. Make it a great home buying day.